Bam, just like that. It's Friday, Pat.
Hey, Rick, how you doing, buddy?
Good. Welcome back. Welcome, everybody. We're increasing the lead time from 15 seconds to 30 to give people time to log on. And we always get on after 3 o'clock because we have millions and millions of viewers. And we don't want to mess up the bandwidth when kids are in school. So, we're cognizant of that. And then, of course, if we can't make it, we still have our stand-ins ready and willing to go. So
There we go. Gotta get behind him.
we're all set up. Yeah, well, I think we're good to go. Hello, boys, Jackie says. So, buenos tardes, muchachos. Sí, amigo.
Tyler from
Tyler, our
Mexico.
buddy. I didn't get a chance. We talked about how well versed we were in Spanish, and I forgot to let you know, Tyler, that I can order a cold beer and ask where the bathroom is. That's pretty good.
Two important things.
Yes, ¿dónde están los baños?
It was great meeting him, though.
Like my hat. Yeah. Yeah, Tyler. Everybody can see that hat. Check that out.
The price mortgage hat.
The coveted price mortgage hat.
Coveted, exactly.
All right. Well, I thought, as you can see by the thumbnail, I said, time to list. So I want to run through some numbers, Pat, show you that. I mean, if you were thinking of listing your home and you say, well, I think I'm going to wait till June or maybe the end of summer or fall. We only know what we know and we don't know what we don't know, right? And I'll tell you right now, it's time to it's time to list if you're thinking about it. I'm going to show you why I think that. So here's one of the first things you look at, and inventory is not going up, right? There's less and less competition in every neighborhood that you go into right now. There's nothing there. We're going to be looking at a house in Gilbert on Monday, and one of the struggles that she had, I said, you were listed in 2020, you were listed in 2021. Why didn't it sell? She goes, well, because the development I was in new construction. They were still building them. And the only people that were looking at my house were people that would look and see what it looked like finished. And they went back over and talked to the selling agent. So she said they had more choices. Well, now the whole development's built out and there's nothing for sale. So, she'll do well now. And then we look at this, and now everybody's green. Everybody's gone up. Not as fast as they were, though. They were going up. It says here that they went up about 9.7 last week on as far as the Cromford index, the percentage. But we had a couple holdouts last week. We had Fountain Hills, or not Fountain Hills, Paradise Valley was actually trending the other way. And now it's turned the corner, which is kind of unusual for April. But average sales per square foot is already up 5% in 2023. And we were only in mid-April. Hello, Stephanie. Good to see you. So that is trending in favor of sellers. And then if we look at here, this is our favorite one. And this is right there, supply and demand. They met. We weren't sure where they were going to go. And now they're clearly separating. Demand is outstripping supply.
Yeah.
Who's that favor? Favors sellers. And where does the Cromford report source their data? Directly off the multiple listing service. They go in and they pull all the numbers off of there, and then they make these graphs and charts. So it's the same source where I get my numbers, but they have just staff of people going in there and populating these things on a daily record. Is it public record? They do have a paid subscription called Cromford Public right here. And my access is denied because I haven't paid for Cromford Public. I pay for the, this is the chart that I can't stand. You just pay for the real estate agent one. So, and Kickmatcher listed Fizbo Monday, heard from every realtor west of the Mississippi on Zillow, formerly Do Vegas. Now you've changed your name to Kickmatcher. So that's the thing about Fizbos, my friend. Every real estate agent is going to call you and say, I can do a better job selling it. For sale by owners, a tough one though, tough road. You're gonna have to you're the one answering the calls and negotiating with everybody. And that's not the hard part. It's just trying to get the eyeballs on it. So here's what I wanted to show you, Pat. And this is listing success rate the last 90 days. Okay. Gold Canyon, 83.8. Everybody's over 75%. Every city in the valley. That's
So what does that
very,
mean? I mean,
you listed your house and 75% of you sold it.
okay.
Yeah. Anything below 60 is leaning more towards a buyer's market. So, and we got good afternoon tech from the top. Yeah. And then Jackie adds here for FSBOs too, make sure is the buyer qualified, because sometimes they come in and offer you the sun, moon, and the stars and they don't have any money. This is a listing success rate here showing it's green, 78.4. The historic average is 68.6. So again, who does that favor? Sellers. And we're going to come back to that in a minute. But Pat, the whole driver of this is in your camp, and that is rates.
Yep. Yeah, I think it is. I mean, today we had, the market was off. The 5.5 coupon was down 28 basis points. It was up, the U.S. Treasury was up 7 to 351. But I will impress everybody. It's the long-awaited. Where am I? I screwed up here. Darn it! Hold on. I had it. Let me just get this here.
And we need a drum roll. Oh, there it is. There it is.
There we go. The pen.
The red pen has made it to Pat's house.
The technology has advanced. The AI, the red pen. But I mean, we're starting to see, I think, a trend. The last couple of years, remember, last year or two, I said I think I'm segmenting this market in 6 to 8 month segments. 6 to 10 months, let's say. We had the inflation, the recession. In October, it kind of seems like it peaked, and now we're seeing since about right here, about the middle of October, rates. There's this trend. Where'd my marker go? Obviously you can see the trend going down. We're circling the higher, lower highs. It's kind of trending downward, and you guys still got Barry is talking about how the Federal Reserve, I guess there's this one governor, Waller, that he says he wants to hike again because, the financial conditions haven't tightened up yet. And he said the labor market's still strong and tight and that inflation is still above the target. I mean, and I think Barry feels that this Fed is still way off, and they've proven to be way off the last couple of years. So, I mean,
yeah, they're getting beat up pretty bad.
Yeah, they're getting beat up by, guys, DeSantis was, hounding them today, watching some of this news. That you got these federal, these experts are just pounding the living heck out of the Fed. And, he just feels he's way off base. He said they're seeing cracks in the labor market. The unemployment rate is low. At 3.5, like you said, it's kind of inverse. If you think about it, it should be the opposite, and, Barry says we don't get a recession when the unemployment, we do not get a recession when the unemployment rate is high, but rather when the unemployment rate reaches the lowest point, it begins to turn higher. So that's their problem, is they're kind of like going at it from a different angle. And, inflation has gone from like 9.1 to 5%. The PPI came out. That was weaker. That dropped from, I guess, like 11.7 to like 2.7. So, I mean, as I always said, you look at the numbers turn to trends, and trends turn into psychology. And the trend I seem to be developed, at least from what my perspective, is that things are kind of, moderating. It's, I just kind of liken it to drinking. I mean, you go out drinking, you have a great time, you're having cocktails, you're having fun. That was fun was back in 2021. Prices were going up, we're having cocktails, we're drinking, and things are getting out of hand. And then you have this crazy good old time, and then all of a sudden you get drunk, and then you're puking. And then you sleep it off, you wake up from the hangover, and you're like, okay. So I think we've gone through this drinking
We've gone
period.
through the hangover. So, well,
Yeah,
Tyler makes a comment here, and Pat, and he goes, is it pointing? It's pointing to another flurry of high pricing. How can this happen with layoffs abundant and interest rates? And thing is that I'm not saying that we're going to have an explosion of prices. I'm just saying that what you're going to see is that
yeah,
we're at 41% of homes are offering concessions now. That's down from 55%, almost 60. So that's going to start going away. So sellers are not going to have to do that now, especially by the month of May. And the pressure on rates is not higher now. It's actually lower. And,
yeah,
and will remain to be seen, but we're not seeing any breakouts on interest rates. So how long will this last? It may just be a spring fling.
yeah,
I mean, we don't know. And so, and what Daniel here is saying, he goes, prolonged rates over 6.25 will continue to add downward pressure to buying power. Well, that's true, but we're still staying at 3,200 contracts every 7 days, and we've had higher rates than 6.25. So in this market, we're 3,200, and new
yeah.
listings are fewer and fewer. And I'm going to punch out some of these questions, and then I want to get back to you here in a second, Pat. I got a question for you. Will the Fed's tightening allotments for the Colorado River have a major effect on the Phoenix area housing market? I'm going to say no. They're giving us until the 30th of May to come up with to how we're going to allot it. But we've been anticipating on our own cutting our distribution by an additional 20%. And I think the feds have hinted that they were going to cut us at 25. And the first people to get the hit on that allotment is agriculture. And I think we only get 30% of our water from the Colorado. And
Yeah.
and then Daniel again asks, what's the Phoenix commercial real estate occupancy look like? Are we the next San Francisco, New York with 60% occupancy? Our occupancy rate, I actually saw an article on it. Let me pull this up for you since we're talking about that. Let me see if I can find this. I read it this morning. Timely question. And they're talking about, I'm going to move this over so you can see it. Tempe Town Lake in particular. And hitting its prime, and everybody's down there, right? Carvana, State Farm,
Yeah.
and
Well,
Open Door.
actually, Silicon Valley Bank too. Don't forget that one.
Yeah, yeah. Well, Carvana has now said that they're not going to renew their lease there, but these guys are getting $37.78 per square foot premium space, and they said here that looking at 9 properties along the lakefront. 95.9% of more than 4 million rentable square feet is leased with a 4.4% vacancy rate. The Tempe submarket as a whole has a 23.2% vacancy rate. So that one area seems to be knocking it out of the park, but
Yeah.
we're not seeing much vacancy panic yet. I think they're saying most of that's kind of
Well,
going to
just
start showing up next year.
one side note that I heard on a business network. If this guy was talking about commercial and residential, he goes, commercial is going to suffer, but he said people still need a place to live.
Yeah, yeah.
You know,
What percent of our buyers are cash? I'll have to look that up. See if I
I think
can
it's
look
still
that up.
around. It's usually in the high 20s. It's been around, if I'm not mistaken, right? It's been about 27, 28, right around there. 20,
Yeah, yeah.
25, 26, 27, 28, if I'm not mistaken.
Um, what do you think? Artificial intelligence will transform the real estate industry like Chat GPT? I don't think it will. I think it just helps agents write property descriptions, helps them come up with YouTube titles. They may get to the point where it can help speed up some of the processes. Will you
I think
be
it'll
able
help on the
to?
lending.
What's that?
I think it'll help. There's talk. I mean, I'm sure there's talk about them underwriters. Using AI for underwriting a loan.
Yeah, I think it'll bring more efficiencies in. I mean, imagine, and this is the hard part. You could say, uh, populate the Arizona purchase contract with the following price and terms. and then it'll do it.
Yeah.
But we're a few years off from that. And and then Stephanie saying, what's the catalyst of when buy downs and concessions disappear? Regression analysis of interest rates to supply and demand. Simply put, if you don't have a lot of supply, but you still have enough buyers to where they're showing up at your house, you were only offering the buy downs to get people to show up. Because remember how slow it was November, December? And
Yeah.
we're already seeing them come down now. So we had
And when rates got into low sevens, that's where, basically people were trying to be creative as far as trying to knock $200-$300 off their payment, right away. And rates coming down from 7.8, 7.25 down to say, the mid sixes. This is where we got right now. We've got just pulling up right now. We've got this is let's see this. Well, this was FHA, but I was just going to do a conventional loan. Let's see here, 95. We got 780. Just pull this up real quick. We've got rates in the. Bear with me here.
Well, Tech's got a question here. Why are concessions preferred by buyers instead of buyers simply making a lower offer? Because it's cash up front. They can save you $5,000 on closing costs, where if you pull them down $5,000, you may be saving a little bit on your monthly payment. So
yeah. Right now we're looking at 6.25, 6.3, 6.25, right in here.
I don't see your chart.
Oh, okay. Did I? Can't share it. Oh, I thought I pulled it up there.
You're still showing off the red pen.
Okay, it's still okay.
Which hey, kudos.
Well, all right. So it's not kicking in, but no, it's about 6.25, 6 3/8. So it's it's definitely a difference of $200-$300, which makes a big difference.
Yeah. So the need to have the rate bought down is not as strong as it was when you saw what happened back when the rates went flying up in March. So
yeah.
That makes sense. I think, and this isn't a push to say make sure you list now. Let's go. It's a good time to buy. I'm just saying, right now, all the indicators that I see, if you were talking about listing and you said, well, I may want to wait till the fall, it's pretty good now. I mean, we had a client that didn't want to list until May because that's kind of when they wanted to move. And, and we said, well, the numbers look pretty good now. And you can always lease back for a month. And that'll give you time, to make your move. And I'll be darned, then put it on the market. And they got listing, just in coming soon, they got offered over their list price in less than a week. So,
wow.
So now Keenan here, let me show you something. Keenan, welcome. Pat, he's one of your neighbors. He's not too far from you, but he has listed his house, and he did an outstanding job. The inside of this place, I got to show it to you. So it's one of those cool older neighborhoods in Chandler with the nice porch and the porch swing.
Oh yeah.
And then this is just east of you over by McQueen and Ray.
Oh yeah. Yep.
But well done. I mean, he simplified it. So he's got, when you list, you want to be a minimalist. So you just want barely enough furniture that's in there. Notice how there's no personal photographs on the wall.
So I got to take all my Wisconsin pictures down then?
Yeah, you'd have to if you listed, but
okay.
And they didn't use a cell phone. So outstanding. Look at that kitchen. That's great.
Yeah, it's great. Nice looking.
Light fixtures. Good cool lighting. This is presenting very well. That beautiful refrigerator there, cabinets.
That's a cool look.
It really is. Yeah. I don't think this is going to be on the market very long.
No.
I like these doors.
Yeah.
They're smoked. And again, cruise around listing photos. You tend to see a bunch of clutter from time to time. And Keenan, he knocked this one out of the park. Look at that shower head. No wonder he's so clean and fresh. Chandler High School graduate too, by the way, guys. So anyway, I think this is going to move quickly. Yeah. It's in a very nice neighborhood.
Some people like the character of an older home and older neighborhood.
Yeah. Yeah, so I just wanted to show that to everybody. He's one of our loyal viewers and subscribers, and here Stephanie's saying, "Go Badgers!" And
Yeah, there you go.
you're welcome, Keenan. I think it's going to be an interesting weekend for you. How many appointments do you have booked so far? Do you know? So, and it's that's the hard part. When you list a home, you sit back and you get absorbed by it. How many people looked at it? How many people saved it? How many appointments do I have scheduled? And sometimes you'll have 2 appointments and the first guy buys it. And sometimes you have 50 and nobody writes you an offer. So, you have to continue to be willing to adjust the prices quickly because the first 7 days are what counts.
And
See a lot
correct
of
me if I'm
Minnesota
wrong.
Viking pictures on the wall, Pat. Just kidding. Yeah, they're all
All
over the
bad.
place.
Now, correct me if I'm wrong. Let me ask you something. I've heard from sellers they kind of get hurt emotionally when they hear a negative comment about the house. I mean, you
Oh
can't
yeah,
really take it too personal.
yeah. People will say like like, well, they didn't like the dark cabinets. Well, the
Yeah,
dark cabinets were in the listing photos. I mean, I don't
yeah.
get it. But if they come, I didn't like the floor. Again, those were in the listing photos. I had a gal in a listing that I had down in North Central Phoenix a few years ago, and she just came in and she walked around that house and she pointed out everything that was wrong with it. Very strong personality. And I go, okay. And she goes, what do you think? I go, well, it's good to know what you don't like. Now let's go find you something you do like. I said, look, it's somebody's going to like this house. It's just
Yeah,
not your cup of tea. I said,
yeah.
that's okay. I get it. And then one time I had an agent come in and I was having an open house and he was playing hot shot. He was showing off to his clients. I'm in the kitchen and he walks up to me and he hands me his card and he goes, I think you're about 10K overpriced. I pulled up the comps before I came, and he just went on this litany of negative things about the house. And his buyers went off the other room. I looked at him. I go, you don't have to act like that. I go, it's an open house. Show them the house. They either like it or
Yeah.
they don't. I go, you don't have to grandstand. You're not impressing anybody. And we sold it the next day. Keenan, so far 2 appointments and an open house scheduled. You got 2 appointments already. You're off to the read. Most of your appointments are going to come tonight, as realtors get with their buyers and say, okay, here's what I got scheduled tomorrow. So you might get a couple more tonight. So you don't need 20 of them. You just need one. Pat should buy it.
Yeah, exactly.
Uh, it's got stairs though, and you're getting too old for that. So,
Yeah.
oh no, wait, that's me getting too old for that. So, do we have anything coming down the pipeline next week, Pat? As far
No,
as
not really. It's we got some basic stuff. Bond auction. We've got just some basic stuff. Existing home sales. Nothing crazy. I mean, they're gonna the Fed. Just real basic stuff. I mean, I will say some interesting though. Barry had said he was talking about the pause. He goes, the odds are for a Fed to hike one more time by by 25 basis points, followed by a pause. But basically, he says what happens to stocks, bonds, real estate after the Fed is done hiking. And he said they have this David Rosenberg that looked at the last 50 years of history to see how different asset classes have performed uh, from the Fed's last rate hike to the first rate cut, right? The pause period. And he said historically, we have seen the 10-year bond decline 43 basis points. He said basically, which would be a good thing for mortgage rates. So, and he goes, additionally, real estate performs very well. So, it seems as though we're getting into this. Like I said, I think people have to realize there's a lot of noise out there, but I'm trying to step back and say, okay, we went through all this hubbub with inflation, the recession, the last year and a half. We saw inflation hit a peak. Now it seems like it is subsiding. And I think Jackie, our famed, senior analyst that watches us on Friday and was with us on Thursday, she sent us that Thursday. She sent us that article about a week ago about talking about they're talking about 10 million job openings. And she said, there was that video where these people were questioning, which I don't know. The Fed says there's 10 million job openings, but how many of those are really duplicate job openings? You know, I mean,
Yeah, yeah.
I mean, that kind of that article, that video really made me pause and say, somebody who's posting a job in Phoenix, say they post a job in Milwaukee too, because jobs are fluid now.
Yeah, and like you said earlier, it's just a lot of those are just they're surveys, and you and I were talking about how they. I'm going to talk about the biggest driver of inflation is a price that no one's actually paying. There's a statistic called owner's equivalent rent, and they said it's determined by a monthly survey of consumers who own a primary residence. The survey asked how much consumers would pay to rent instead of own their home, and it represents approximately 25% of the CPI.
That's a
So
lot.
that's the data. Pat, if you had to rent your house, how much do you think you would pay for it?
How much
You
I
know,
would
like,
pay for it? Yeah.
yeah, how much would you rent? It's a little bit of a fuzzy metric. And down here it says generally owner's equivalent rent is obtained through surveys asking homeowners following question. If someone were to rent your home today, how much do you think it would rent for monthly, unfurnished, without utilities? I mean, how concise is that?
Yeah. Well, well, it's like when they come out with the jobs report, it's basically a household survey and a business survey. It's not an exact number. It's basically the Fed. They're laying out like 60,000 phone calls. So I don't know who the hell sends makes these phone calls saying, "Hey, are you working?" But these surveys, they're surveys. So the numbers, that's why they make revisions constantly. So it just seems like the tea leaves are, with the rates kind of moderating a little bit, the trend in the chart with the rates are, coming down. And, the retail sales were off, they fell 1%, and it was obviously worse than the 0.4 that they're, decline that they're expecting. So, and there's another thing too that Barry had said too. The auto, this is kind of interesting. The auto industry said has been hit hard by the aggressive Fed rate hikes because it said CarMax had just reported earnings, explained that their sales were significantly impacted by the affordability issues as monthly payments are surging. He said almost 17% of the monthly car payments are above $1,000 plus,
God.
compared to only 6% 2 years ago. He said this is a record high. So he said the Fed hikes are clearly having an impact on car sales, and it's going to continue to slow the economy. And obviously, car loans. I can't imagine having a car loan, $1,200 car payment. There's no
Well,
way.
go out and get one of these big electric cars and then spend,
Yeah,
a couple thousand putting in the electrical needs that you would have for your garage. And then, you're saving money on gas, but you can't afford to go anywhere.
yeah, exactly. So
So,
I'm just pointing this out because it's stuff that Barry's been pointing out, day by day. I don't talk about it every time, but there's some stuff that I gathered up here the last couple of days that he's been pointing out on his weekly video. So it's, things seem to be, it's still tight demand. The buyer demand is out there. And so something just feels like, I guess we're not arguing, but we're just trying to set up a point that, hey, people are saying that we're going to see the market crash 20, 25, 30%.
it's not lining up there yet, but let me ask you this question because there was some chatter out this week. FHA 40-year mortgage. What's that all about?
There was an article. Mortgage News Daily said, no, there's not going to be an FHA 40-year. That was the headline. So, I don't, it's not getting, I haven't figured out the payment, the amortization schedule, but I don't know. There was Mortgage News said, no, it's not happening. So,
Well, here's the market cycle, and you talk a lot about psychology, and this is what Tina Tambor puts out. So
yeah,
January, November, we had despair. This is when things were really bad, and January skepticism. Now we
yep,
have despair again in February, and then
yep.
skepticism. So we are between skepticism and hope. So
Sounds like my dating life.
yeah, she hasn't been charting that because that chart would look something like oh, let's see, they had one up here that would kind of make sense. I was wondering when we were going to get a dating analysis.
Yeah, this
comparison
this
here,
looks
but
like my dating
okay.
world.
That would
Yeah,
look like this.
yeah.
So let's, but this is an interesting one. All active listings. This is where we're at. We're down here. And that one guy that came out here, or that Reventure Consulting said that our listings were at a 7-year high in Phoenix. Well, no, they're not. They were right here.
Yeah.
So we're not at a 7-year high. Now the high was here,
Yep.
55,766. So I don't see 7 years below this number here. So again, if you're going to spout off some numbers, put in some good numbers. And Tyler here says you should have a show or two of y'all's dating life. Get a lot of you. I'm going to keep that close to the vest, Tyler. That's a
Yeah.
terrible idea. I'll share you a couple tidbits over a beer, but that's it.
Yeah.
So I got I can think of far more reasons to have another channel than
Yeah.
that.
Yeah. It'd be pretty boring. But
Oh
I
God.
think the only thing that you're going to see more listings is obviously if rate, looking at, I mean, if rates do, once again, we're kind of stuck between this rock and a hard spot where if rates, let's say they went down to a reasonable level, because Barry said that, if you get that sweet spot of, five, the low fives, if somebody's at 3.5, they're like, okay, I can sell my house and get another mortgage at high fours, 5%. That's not too bad. But they're not going to trade out their 3.5 for a 7.25% rate. And I think that's where you would see listings increase. Correct me if I'm wrong.
Well, I think right now the biggest fear for sellers is A, they're going to end up with a higher interest rate, and B, what if they can't find another house?
Yeah.
Right. So, I want to sell this house. Okay, I'm okay with a different payment stuff because I got equity. It's not going to hurt me that bad, but I'm worried about whether or not I can find that other house. And there's ways around that and ways that an agent can help you get that done. But I think, like we mentioned in the show last night, I think our sweet spot is 5.5% and 18 to 20,000 listings. And now you got a market that goes like this, rises slightly, and people start catching up with affordability, maybe. And affordability doesn't always correct itself. Ask the people in San Francisco.
Yeah. Yeah. I mean, affordability's been there unaffordability's been there forever.
Yeah. So their wages adjusted. If you get, I remember when I got transferred from Seattle to California, there was always each job had a certain grade and stuff, but then there were certain cities where the pay increase was far greater.
Yeah.
But it hurt guys that went from Boston to Seattle, because Seattle at the time was not expensive. I got a friend that, took a job transfer and a promotion over to Seattle. I think it was a lateral move, and they wouldn't give him a raise for like 3 years.
Yeah.
Oh yeah, you're making too much. Well, I earned it. It
Yeah.
was ridiculous. But I think, and so I think our market, we're sitting here looking and we're waiting for affordability. Could be waiting for a long time.
Yeah.
So it depends on how much you make and what your position is. So,
Yep.
but I agree with you, Pat, that we're not going to have to get down to the 3 to 4% range for people to make the decision to go ahead and list their house.
No.
I think the low fives, they'll probably do that.
Yeah. You're talking high sixes, low sevens. I put myself in that position. If I was at, just individualize, the decision and say, if I was at 3, do I want to trade out a mortgage at 7, 7.25? Hell no. There's no way.
Yeah,
Not
at all. And Keenan did point out here, he goes, they were kicking around for.
Yeah. Yeah. It's just for loan modifications is basically, well, they do 40 years for loan modifications. That's the only thing. Yeah.
Yeah. Yeah. So,
yep.
Well, awesome. Well, Pat, congratulations again on the red pen. I mean, that is clearly worth celebrating. But it's not going to overshadow the fact that by next week, we will be at 1 million views, not subscribers, but 1 million views. And if you sign up for my weekly newsletter, you can win your 1 million views notepad and the opportunity to get the coveted price mortgage jacket. Yep. I mean, I can't even imagine how many newsletter subscribers I'm going to have with prizes like that. So maybe 2 more.
We'll show it next week.
Yeah. We will have that drawing next week. We'll do that for sure. Pat, have a fabulous weekend. I'm going to be camping up at Lost Dutchman, and I think there's supposed to be a whole bunch of flowers out and everything, so it's going to be pretty cool.
Cool.
I've already got my food in the fridge, ready to go. So,
All righty.
all right. Take care, everybody.
Have a great weekend, everybody.
See ya.
Bye.